to prove that ZANU-PF has failed Zimbabweans in many aspects, they destroyed a once working currency. Zimbabwe dollar was a respected currency in the region, in Southern Africa, as well as in the entire African continent. They managed to actually reduce that currency equivalent or less than a toilet paper. And now the Reserve Bank governor claims that because, I mean, his name is John Mashayabano, he claims that because the business has requested RBZ to introduce local currency, they are putting in place a roadmap for that currency to be introduced. But this would be catastrophic, taking into consideration that mechanisms that sustains a local currency in Zimbabwe have not been put in place. We have an economy that is not working. We have an economy that is highly struggling. We have an economy that cannot create jobs. We have an economy that is not industrialized. We have an economy that chases Zimbabweans out of their motherland. And just imagine them introducing that currency. What will sustain that currency? What exactly will strengthen that currency? And also taking into consideration alarming levels of corruption from senior government officials. And when they say business has called for the local currency to be restored, you are talking of Zukanandas, you are talking of Yogudawashe Takwirei. These are the people in business in Zimbabwe they refer to as business. You are talking of Tungwararas, criminals. These are people who are referred to as business. Do they have a clue when it comes to currency on how it works and when it should be introduced and what guarantees the survival? Mnangagwa has attempted to introduce, I think, more than 2 currencies in his tenure for the last 8 or so years, but they have failed catastrophically because when it comes to currency, there is no rigging. Greetings and welcome to your lovely channel, the Hlonipani Global News. If you're watching us for the very first time, please do remember to press the red or black subscribe button so that next time when we film live, you become the very first one to watch us. So, the Reserve Bank of Zimbabwe says it has figured out a roadmap towards restoring the local currency Zimbabwe dollar as a mono currency by 2030. This comes after Reserve Bank Governor John Mashayabano recently said businesses demanded the return of Zim dollar, and I've indicated what they mean by business. It's simply Gudawashe Takwireis and Zwikanandas, your Scott Sakupanyas, and lobbied government to ensure that in its 5-year 2026 to 2030 strategic document, the Reserve Bank says it has gathered critical feedback on the return of the Zim dollar. The Zim dollar has had in fact various forms and manifestations since Zimbabwe's independence in 1980, getting shredded, liquidated, and demonstrated, demonetized rather, due to the economic meltdown, hyperinflation, and exchange rate stability. After the unprecedented economic meltdown and hyperinflation in 2008, the Zim dollar gave way to a multi-currency in 2009. The multi-currency has remained in place since then, with some intermittent interventions back to the Zim dollar, albeit temporary. ENS dominates the market, with the United States dollar commanding over 80% of transactions in Zimbabwe. At the moment, the Zim dollar since April 2024 is trading under the name Zimbabwe Gold. The RBZ document explains: 1. Monocurrency roadmap. The most frequent and urgent imperative raised by stakeholders was the need for a clear a credible and public roadmap for the transition to a monocurrency ZiG by 2030. Stakeholders sought assurance, possibly through legislation, that foreign currency deposits would retain their value post-transition, and that the process would be predicted to avoid disrupting existing US dollar denominated contracts. Two, enhancing confidence in the ZiG. Stakeholders identified several operational challenges with the local currency. One, availability and quality. They highlighted difficulties in accessing ZiG cash and pointed to the need for improved quality and durability of ZiG notes to facilitate everyday transaction. When I said that was a tissue money, people thought that I was joking. It is not even durable. The issue of durability is raised even by Zwiganandas. Driving demand. A key proposal was for the government to lead by example by increasing the proportion of taxes payable exclusively in ZiG and exploring the payment of royalties to the state in local currency. This would structurally increase demand for ZiG and support its stability. Three, currency discrimination. Concerns were raised that mobile money operators made it easier to transact in US dollars than in ZiG, creating an artificial barrier to the local currency's adoption. Three, managing the cost of doing business and access to finance. Stakeholders expressed concerns over financial cost and access. One, high bank charges. Bank charges were cited as being too high, increasing the cost of operating through the normal banking system. Two, interest rates. Interest rates on ZiG loans were viewed as potentially prohibitive, threatening the viability of borrowing in local currency. Three, targeted finance facility, TFF. While appreciated, stakeholders noted the TFF had low utilization and recommended expanding access to value chain participants and improving long-term lending conditions. Four, foreign exchange market dynamics. There were divergent views on foreign currency retention threshold, reflecting different sectoral needs. Exporters, e.g. miners, argued that the current 70% retention was insufficient due to cost, e.g. for electricity, effectively reducing their user proportion to around 50%. They advocated for an increase to 85%. Importers, e.g. retailers, advocated for a reduction in retention to increase the supply of foreign currency on the interbank market. Five, reinforcing the policy credibility and communication. Stakeholders widely recommended the Reserve Bank of Zimbabwe's consultative approach and the recent period of price and exchange rate stability. 16, in summary, stakeholders provided a clear mandate to the RBZ, continue the path of stability and transparency, but urgently address the practical hurdles to using the ZiG, provide clarity on the future of the currency regime, and work to lower the cost of formal financial intermediation. You know, in Zimbabwe, I think we've got a very, very extremely poor government. I'll make an example. You know, I have a company there that I'm running, but I won't expose it. Now, we're opening a bank account for that company. We have it. It is existing there because Zimbabwe is our home and we need to invest there. The cost of maintaining a business company is per month, the bank charges, it's 20 US dollars. That's a lot of money. That is a lot of money compared to the cost of I mean, how much is charged in South Africa for a bank account monthly? It is quite cheaper than what is happening in Zimbabwe. And I wonder, how do business thrive if you give every month, especially for small businesses, if you give every month $20 US. And also I understand the bank accounts for non-governmental organizations, for societies, they still treat them like business. They charge $20 US per month. That is a lot of money. The banks are actually robbing businesses and people. And that is why the people would not invest into such an environment. Rather, when you are doing business, it's better to keep your money at home than actually putting the money at bank. Just imagine the cost that would be accrued by the bank within a period of a year, just for an account, for keeping your money, and not counting when you are withdrawing the charges, and when you are actually depositing all those charges, not counting them. Banks are making a lot of money in Zimbabwe. In fact, that is not no longer business. This is abusing people. Now, on the currency, I think the business community told, to some extent, the Reserve Bank of Zimbabwe the truth. You see, they are failing administratively. What about sustaining the currency, the stability, protecting the inflation? There is absolutely nothing that is discussed in that regard. So, to introduce a currency that will work in Zimbabwe, we need to work on quite a number of things. Otherwise, they're just selling false narrative. And obviously, what do you expect from business comprising of Zikananda in terms of advising the Reserve Bank of Zimbabwe? Thank you very much for watching us. If you are watching us for the very first time, please do remember to press the red or black subscribe button so that next time when we beam live, you become the very first one to watch us. So, Mhlabane is signing out.